Welcome to Investors Insights, episode 191. Today we'll be discussing the election is finally over, the uncertainty is behind us. For our video watchers, we invite you to try listening to the same information on our podcast. Many people are discovering they like driving or exercising while listening. So guys, let's get started.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy team from Five Plan Partners.
Interesting week last week. The election is finally behind us. I don't think anybody's going to complain about that. It was not boring by any means, especially in terms of the markets.
Nope.
In fact, the chart of the week, we talked about Tuesday night when it looked like Trump was going to win. The market fell, or the Dow fell 976 points. That is a big fall overnight. Yes. The futures did. So, and then ended up on Tuesday or Wednesday actually being up. So crazy night in terms of the markets. I think the big turn back up was because the uncertainty is behind us. The election is behind us, so we're excited about that. Trey, share your thoughts.
Yeah,
you got some good thoughts.
I think it's never as bad as you fear or as good as you hope. I think that we saw that in an 8-hour period. Everyone panicked and then relaxed, and I think the markets rallied back. I think something else is important to point out that the S&P 500 correctly predicted the winner again. With 3 months leading into the election, when the market is down, you see the incumbent lose. The market was down 3-4% leading into the election. Everyone was saying, well, this time's different. Hillary Clinton was by far and away the favorite, but nothing went as scripted. The market somehow, I guess, saw this coming. And then now we see after the election that uncertainty removed, we've seen a rally in equities. However, the downside, we've seen a huge spike in inflation expectations. We've seen bond yields spike. And when you see bond yields rise, you see bond prices fall. And so while equities are rising, bond market is falling a little quicker than expected. 40 basis points in under a week on the 10-year. 40 basis points is 0.4 of 1%. Seems like a small amount, but that is a very large move in bond market in terms of such a quick. So we're seeing some knee jerks. I think people are overreacting. Inflation's here. What'll be most important really now that we've got the week behind us is we've got the Fed to look forward to, and then also what agenda will a new President Trump prioritize. He's got 10 or so things that he thinks that he said are very important for the first 100 days. It's not what those 10 things are, it's what order. Does he start with renegotiating NAFTA or infrastructure, or do we start with corporate tax reform? Do we start with something that's hugely, that's going to be a huge deal, healthcare reform? I think that'll take a long time. Does he start with things that he can quickly check off, or do we that's going to be very important to see. It's not just what he does, it's how he prioritizes them. I think the market is pricing in the most optimistic portion. We're going to have lower taxes, higher earnings. Let's go up.
Right.
And that's good, but we're still a lot to digest.
Yeah, next Fed meeting that we're looking at now that the election is behind us, Fed meeting is December 14th. And so we'll be watching that carefully to see what the Fed does. And it's looking very likely that they will raise rates December 14th.
Yeah, they'll probably raise them 25 basis points. We've seen the 10-year go up, like I said, 40 basis points. So it has the bond market. Can the Fed raise rates and not be terribly impactful? Has the bond market already priced that in completely? That should be, that'll be interesting to watch.
Actually, talk about an interesting topic you said, or talked about this morning, now that the election's behind us, what we're looking at going forward.
Sure. To piggyback on what Trey said, now somewhat the uncertainty is the order of the agenda and what is taken and what you go at. We wanted to give you one example. That's Dodd-Frank. Dodd-Frank has major impact in the consumer mortgage market. It's got major impact in the way that corporations borrow. And one thing that Donald Trump has already said in looking at Dodd-Frank in an interview, he said, well, I'd really kind of like to repeal it or at a minimum, cut it back. So as you go forward, that's just one example of something that they are looking at and how effective they would be on rolling maybe part of that back or all of that back. To Trey's point, what the timing would be. But that could have a good bit of impact on corporate and consumer credit in the United States, particularly on the regulatory side. So that's just one example of many in this list that could be market impactful, and when they take it, and to what degree.
Yeah, there's a lot to analyze there. So,
yes.
And as investors, we are really excited to have the election behind us because this allows us to start making the necessary adjustments in your portfolio going forward to catch the good growth. So thank you for watching. Please let us know if you have any questions. We love hearing from you. Have a great week.